What's up guys, Mike here. Today I'm going to try to answer the oldest question, a question that has been asked for thousands of years, ever since the beginning of time, a question that everyone has been pondering about, and that question is how to invest in 2020. But seriously, this is an important topic I wanted to bring up, and now is the perfect time to do it. We have just faced new stock market all-time highs, and interest rates are at all-time lows. If you would have just invested in almost anything, you would have made a ton of money. At this point, it's not even imaginable that losing money is even an option. But unfortunately, this brings up several issues that few people are even talking about it. The reality is there will be a time where the tides will turn and our investments will start going down in value and a lot of people will get burned. In order to make sure this doesn't happen to anyone who's watching this video, these are the best investment strategies that you could start implementing today. These are a few things every investor needs to know to make as much money as humanly possible. We are now in the longest bull market in history, which began in March of 2009. Since then, we have seen 11 years of consistent year after year growth with a total return of 473%. In fact, there's only 3 other times that even came close. Besides recovering from the Great Depression we had in the past, which lasted over 70 years with a return of 454%. Then we had in the 1980s, which lasted about 5 years with a total return of 303%. We also had the Great Expansion in the 1990s, which lasted over 9 years and gave us a return of 391%. Now we have the 11-year-old bull market, which continues to grow higher than the rest with no end in sight. This isn't to say that the market cannot continuously move up. After all, we are in uncharted territories and no one can predict the future. Not to mention, just because we are at all-time high, it doesn't mean that it can't continue to go even higher. Just look at the past few years. In 2013, the market hit all-time high, and of course, people called it a bubble. If you're wondering what the all-time high people are referring to, that is that S&P 500 hit a price of $1,806 per share. Then again, in 2014, the market hit all-time highs, and again, people said that the market is going to crash. At that time, the S&P 500 was trading at $2,016 per share. And of course, in 2015, the stocks hit all-time highs again, and there were furthermore talks of a market bubble. That's when the S&P 500 was trading for $2,128 per share. Then again, you guessed it, in 2016, the stock market again hit all-time highs, and there were furthermore talks of a verge of a bubble coming up. That's when the S&P 500 was trading for $2,193 per share. Then in 2017, stocks hit all-time highs, and economists also called it another bubble coming up. And the S&P 500 was trading for $2,657 per share. Okay, hang on there. I'm almost done, I promise, okay? 2018, more records were breaking, more talks of bubbles, and the stocks were trading at $2,940 per share. Then again, last year, stocks were at all-time highs, like buttons were being smashed for the YouTube algorithm, and people were predicting of bubbles. Now in 2020, the S&P again hit all-time highs, and we're now trading at $3,027 per share. Today we are continuously hitting all-time highs. As you can see throughout this bull market, we can learn a few things. First, I'm going to ask you to smash that like button for the YouTube algorithm. It really took me a long time to research all that data, and I'd really appreciate it if you did that. But seriously, this is what we can confirm. First, the market will continuously hit all-time highs. This is not new, and there's nothing to be confused about. Let me show you why this is not even an issue. If you go to our trusted Google search engine, we can see that there are 253 trading days in a year. This means since 1950s, we have had 17,710 trading days. Of these, 1,100 of these days were all-time highs. Which means if you do some simple math like divide and multiply the days by the year and the things and the that, and then we come to a conclusion that there have been all-time highs about 6% of the time. In other words, it means that 1 out of every 16 days there will be a market all-time high to look forward to. This is factual data over the last 70 years. So I always see people get scared by it, and I just want you to know that this is just normal part of the market. As production increases, prices will continue to go up, populations will increase, and also like buttons will get smashed. Second, we can reasonably agree that stock market experts have absolutely no idea what the heck they're even talking about. Predictions like a bubble coming up is absolutely worthless. Sure, this could all be entertaining that you know something that other people in the rest of the world do not. But if you go and invest off the information that they are giving you, it's like going and buying a lottery and scratching it and hoping that information is correct and you win big. Third, when it comes to this data, there is something more concerning that we all need to remember. And that is that every single bull market will eventually come to an end and prices will drop. This is information that is not being covered, and misinterpreting it can be disastrous to an investor. From what I see, a lot of investors, and this is especially true for new investors, that they tend to forget that markets will go down and now everything will continuously go up in value or price. They're investing with the mentality that the markets will continuously go up year after year. They have never experienced where the market has dropped for an extended period of time. This is a dangerous combination where people get ahead of themselves and overinvest. They have no idea what to do in a bear market and they end up losing money. This is why it's so important to bring this to light, because there will be a point in time in the future where the markets will go down. This is a true strategy in terms of when a market goes down, is to buy, hold, not sell, and keep buying without selling. In terms of how bad it's gone in the past, here's what we have seen so far. The Great Depression in the 1930s lasted about 3 years with a loss of 80% in the stock market. Then in the late 1970s, the recession lasted about 2 years and there was a 42% loss in the stock market. The dot-com bubble was similar, which lasted about 2 years and there was a 44% loss in the stock market. The latest one was the Great Recession, which lasted about 1 year and there was a 50% loss in the stock market. From the last 100 years of data, the average bear market has lasted 1.4 years with an average loss of 41%. Don't get the wrong idea. I'm not bringing up this data because the recession is coming. In fact, far from it. When you look at all this objectively, you can only see that the last time we lost 40% in value in the market over the last 100 years were only about 4 times. But with all that covered, I am truly not a fan of timing the market. There's multiple studies that show that buying and holding regardless where the market is at is the most effective and profitable investment strategy out there. Not to mention that you have a better chance of making money dumping all of your money at once than you do by dollar cost averaging into the market bit by bit. This is factual research and I stand behind it. The point of this video is not to throw factual information at you and then go ask you to sign up for WeBull, because they are giving 2 free stocks, one for signing up to use their platform and a second one for making any amount in deposit, which can be $5 or $10. Any amount, they'll give you a second stock worth out to $1,400. So if you're interested, there's a link in the description below for that. The true purpose of this video is to make you aware that going and investing your money into the stock market and making money year after year is normal. But also you should be aware that there can be a recession and you can't lose money in there as well. I feel concerned that people think investing is easy because right now they are constantly making money on their investments. This can cause a lot of people to go into panic when the market actually has a correction. But really, investing can be simple and easy by just buying and holding stocks and index funds for long term. It's a lot harder when the market goes down and you actually end up losing money in there. Experiencing something like that is not easy for a lot of people to go through. Who knows when this might even happen? It can happen tomorrow, next month, or next year, or even 10 years from now. That's why it's so important to prepare yourself now so when it does happen, you're ready for it. First, think to yourself, if your investments would drop 20 to 40% tomorrow, would you be okay? This isn't to say that it's going to happen, but it can. It might even drop more than 40%. It really depends on what you're invested in. But if this would cause you a problem and cause you to have fear about losing money and cause you to sell everything, then you need to go and diversify your investments a lot more. A large component of investing is all emotional. The best and most profitable strategy is to save and invest when you can, as much as you can, and invest consistently. And also do not time the market and hold long term. This logic is thrown out the window as soon as people start losing money. As soon as people lose money, they lose faith in this process and they say, oh, this time it's going to be different. And this is the moment where people start getting burnt. In December of 2018, the Nasdaq dropped by 20% and a lot of people started freaking out and they started dumping their shares at a loss and they were starting to wait until they could buy back in. But guess what? The market went back up and a lot of people who sold their shares were sitting on the sideline waiting to buy back in and they never did. Whoever held and did nothing came out ahead and much more profitable. So expect the market to drop in the future, but just know, keep calm, hold, and fight on till the end because your investments will return and go up. Second, have a long-term outlook on your investments because really nobody knows the future. If you look at the stock market in the past 20-year hold period, it has never produced a negative result. As long as you don't plan on selling your investments on a short-term period or when a price correction happens, no matter what the price is, it will have no negative effect on you at all. In fact, any drop in the price in the market should actually be celebrated. If you think it through, you can now actually get that same stock at a discounted price before it starts going back up again. Even if it continues to go down as you keep buying, just think of it as you keep getting better and better deals each time you buy. But if you're over the age of 50 and you need that money on a short-term period, I'll be honest with you. You shouldn't invest in anything that has the potential of dropping so much in value. For example, if you have coming up bills, then you're better off putting that money in a high-yield savings account that pays you at least a 1.7%. This way, your money is safe and you have access to it anytime you need it, and your money is also keeping up with inflation. Overall, if you have any long-term outlook in investing, then any short-term price drop should actually be ignored as if it never even existed. Third, you should always keep an emergency fund that covers at least 3 to 6 months worth of your expenses in a high-yield savings account. This can be your safety net when the market crashes or you lose your job or you have an emergency that comes up. For me, my emergency fund is actually my peace of mind. Fourth, I also recommend you pay down any high interest rate or variable interest rate debt that you might have. This means any credit card or any school loan or any short-term debt or any short-term mortgage loan that you might have, you should pay down that as soon as possible. By paying down high interest rate debt, you are actually freeing up cash flow and increasing your wealth in value over time. Fifth, make sure to always max out on all your retirement accounts. I highly recommend that you start maxing out your Roth IRA account. This is a retirement account that you contribute post-tax money up to $6,000 a year. And any profit you make inside this account, you never pay a single penny to the government. Meaning you have the chances of making hundreds of thousands or even millions of dollars into this account and you never ever pay a single penny to the government. It is all absolutely tax-free growth inside this account. I also recommend that you also contribute to your 401k and max that out as well. In this account, you invest pre-tax money and you only pay taxes after you take it out of the account after the age of 59 and a half. This way, you save a lot more money in taxes and gives you access to a lot more money to go ahead and invest with right now. Second, in terms of what to invest in, the choice is all yours. My recommendation is always an index fund. This is a broad investment that tracks the whole market, so if the market does well, so do you. This is super easy to do, it requires no work, it's diversified, and it actually typically outperforms any of the best hedge fund managers. I follow the 3-fund portfolio, which covers a mix of US stocks, international stocks, and also bonds. If you want to copy what I do, here's what I use. I get 70% in VT-SAX, another 20% in VTIAX, and also 10% in BND. This should give you a broad portfolio that will give you a fair return in the next 20 to 30 years. Or if you want to go and invest in individual stocks like Tesla, Google, or Amazon, go ahead. Just know this is a lot more riskier and you're a lot more likely to lose a lot more money. But at the same time, you're also a lot more likely to make even a lot more money. As long as you know what you're doing and you're okay with the risk, then go ahead and do it. As you gain more experience, I highly recommend that you start going and investing into real estate. Third step is to invest consistently and to know that investing is not a one-way approach. Investing requires a consistent amount of money every week, month, year after year without ever skipping a beat. Doing this will allow you to buy at the lowest times and get the highest returns. Just remember that markets will not go up forever. There will be a recession or a correction price at some point in time, and it's best to put yourself in the best financial position. So when it does happen, you won't be in a bad position and you'll have a safety net to fight it through, and you will make a ton of money when the market recovers. So invest consistently, long term, have an emergency fund, pay down high interest rate debt, and also reduce your expenses. With that said, thanks for watching my video. I really appreciate it. As always, make sure to smash that like button, hit that subscribe button, hit that notification bell so YouTube could alert you when my next videos come out. Also, feel free to add me on Instagram. I pretty much post there daily, so if you want to be part of that, make sure to add me there. Also, if you want 2 free stocks from the stock market, WeBull is giving out 2 free stocks. One for signing up to use their platform, and the second one for making any amount in deposit. Could be $5, $10, any amount. They'll give you a second stock worth up to $1,400. So make sure to check my link in the description below for that. Also, Robinhood gives a free stock. Make sure to check the link in the description below for that. As always, thanks for watching my video, and until next time, make money with Mike.